Welcome back to another video. For those of you that don't know me, my name is Brian Heron. Let me tell you a secret. Come here. If you don't like and subscribe and comment down below, you're gonna be poor forever. Okay, I'm just kidding. But no, really, seriously, like and subscribe. I'm not starting my video until you do it. So, go ahead. Oh, thank you. Took you long enough. In today's video, I want to talk about why people procrastinate or postpone or, for the most part, never invest. So when people think about investments, they think about probably 401k, stocks, they think about Wall Street, they think about, putting money into a company to get a return. That is definitely investing. But did you know that there's more than one way to invest? Did you know you can invest in your 401k, which is put into publicly traded companies? And normally it's put into ETFs or they're put into some type of mutual fund. Mutual funds and ETFs are just funds that are made up of multiple companies, sometimes hundreds of companies, such as Apple, Meta, Verizon, big name companies like that, Walmart, Target, and they just own portions of those companies. And so you're investing into all these companies when you invest into a mutual fund or ETF. There's other types of investing such as real estate investing, buying stocks, investing into companies, starting a company, because that's an investment, and then investing into people. Sometimes people invest into people, financial money, for their ideas. But what is holding these people back from making these investments? The only thing I can do is relate to everything that I've learned over my career as an investor and where I was when I started. I was a huge procrastinator because I did not think I knew enough. I was constantly reading book after book, listening to video after video, podcast after podcast, and continuously going down this rabbit hole by an investment property. My first investment property was a triplex in Pittsburgh, Pennsylvania that I bought that I took forever to buy because I was always worried about what was going to happen. I was worried about the risk. I was worried about toilets overflowing, pipes breaking, and all these horror stories. And that's the problem, I think, nowadays, is that they're horror stories. We are embedded today with so much misinformation from our coworkers, the neighbors next door. We are so ingrained in our brains today with false information. We go to school and we're taught to get a job. We have friends and family that knew somebody that had an aunt, an uncle of a second cousin that owned an investment property and it failed. It was the worst thing they ever did. And we know somebody that tells us not to buy that stock, or worse off, to buy a stock and then you lose everything. So our brains are constantly being pulled and tugged in every different direction. But the awesome thing for you is that you're listening to me. Sometimes the worst enemy that we can have when it comes to procrastinating and not investing is our own family. I've had my own mom tell me,
"Why are you investing into that? Why are you doing that? Oh, Brian, be careful. I've had a friend."
So sometimes it's your wife or your husband or your brother or your sister or your aunt, your uncle, a grandparent, somebody that you trust so much are giving you information on something they have never done or experienced themselves. That can be a disaster for your financial future and your financial life and your investing career. Just because they're scared to invest doesn't mean you have to be. But here's what you have to do. You have to know that no matter what you invest in, there's always risk. Let me give you a very simple example since we're all brainwashed that school is the best thing to do. So we're constantly being told, go to school, get good grades, do well, get into a good college, get a good degree, spend all this money. Do you know that what you're actually doing is investing? Think about that. Think about what you're doing. When you go to college, you're investing, right? You're investing money. And if you have a career that's long or that takes a lot of education, lawyers, doctors, PAs, something like that, engineering, that becomes very expensive, especially if you go to a prestigious school. So I want you to think about that for a second. It can cost you hundreds of thousands of dollars to get a doctorate in something. How much is the return on that going to be? How long is it going to take you to pay off that initial investment? So, hey, this is the way I look at it and I think about it. If I'm going to invest $100,000 in my education, I better be darn sure that I'm going to get a good return. That's the most common investment that the average human being on this planet makes, is they make it into themselves with schooling. So you're willing to take a risk and pay tens, if not hundreds of thousands of dollars in an education that I commonly see a lot of people get no or little return out of. Those people with those basket weaving degrees. I'm constantly seeing people invest in themselves, going to school to try to get a better paying job. And most of the time I'm seeing, and I've seen it with my coworkers, I worked in a steel mill for 16 years, and I constantly saw them when things got rough and tough and we were getting laid off, the recession hit, COVID hits, things like that. They're going back to school, running back to school, getting themselves into bigger and further debt to educate themselves, to invest in themselves. So they're investing to only come out with maybe, yes, a 2-year degree or a 4-year degree that gets them going from level A to level 1A, right? So they increase their income maybe, 5 or 10%, but the return on that investment that they made financially doesn't make any sense. So you're willing to spend that much money. You're willing to spend tens of thousands and hundreds of thousands of dollars on an education to get a small return in most cases, but you're not willing to invest in something as simple as a good company that you've scouted, that you've done your homework on, that you've actually looked at their earnings to income ratio, that you actually looked at, if I buy a piece of property, let's say a rental house. I'm big on rental units. Everybody knows that by now. And if you haven't, it's because you're not watching enough videos. Get to watching these videos. Start learning things. No, but I'm a big real estate investor. I am willing to simply do the 10, 20, 25, 30% down on an investment property. It's a lot cheaper than going back to school and spending $100,000 on an education. If I buy a $200,000 duplex, I only have to come up with about $40,000 to $50,000. And by the way, I want you to know that that's not the only way to obtain these properties. I obtain most of my properties, not with my own cash, but pretty much no money out of my pocket. I invested my first 8 deals with only about $6,000 to $8,000 out of my actual pocket. And my profit from those deals was hundreds of thousands of dollars in just a matter of 2 or 3 short years. I'd rather invest that $40,000 or $50,000 in that investment property, which by the way is probably half of what you're gonna pay for a reasonable education at a reasonable school, not get as good of a return as you would taking that money and investing into real estate or investing into a good growth stock mutual fund or investing into a good company that you vetted. And by the way, none of this is financial advice, just so you know, we got to put that in there. None of this is financial advice. This is what I would do. This is what I do for a living now. For most of my living, I make more money investing than I do working. On this example where I give you, where I'm buying a $200,000 duplex, I'm throwing $40,000, $50,000 down fine with closing costs, right? So I buy a $200,000 building, I put $40,000 down, 10 in closing, can't forget about that. But my balance is $160,000. My total taxes, insurance payment, principal payment is gonna be right around $1,600 in today's rates, maybe $1,700 depending on taxes and that type of thing. But I'm gonna be able to rent out both units for, somewhere around $2,200, $2,300 in my area. So we're looking at, we'll go low end, we'll even say $2,000. So we're gonna have $4,000 of income. We are going to pay that mortgage payment of $1,600. And that's gonna leave us a net of $2,400. Simple math. 4,000 minus 1,600 makes 2,400. That was good math, right? Yes, it was. Now out of that 2,400, I'm gonna have to put some money aside for some vacancy and that type of thing, and some maintenance and CapEx, $400 a month. Now we're down to $2,000 net. That's $2,000 a month you get to walk away with because you took the risk. You invested that money into an apartment building, then into your education as far as college goes. I don't know if I even want to put that stuff in there as far as the college, like comparing them, but $2,000 a month times 12 months a year is a net gain in your pocket of $24,000, and you invested $50,000 including your closing. You're looking at almost a 50% cash on cash return. I don't know where else you can go to make 50% on your money. I don't know any stock that pays 50%. I don't know any education that gives me 50% loan to value. I don't know where, I don't know. Comment down below and let me know if I'm wrong. Give me some examples of down below of where you went to school, invested $50,000, $100,000, $200,000 in your education, and now today you are so much further ahead. You've gained more than 50%. Oh, by the way, year after year, 50% cash on cash return. Comment down below. I like to hear. So the main reason why people don't invest is because of that risk that they're worried about, because of all the negative influence from people that have never done that type of investing. Or it could be yourself like me. You're a procrastinator and you think you need to know everything and you don't. So to me, the biggest risk of not investing is not investing. That's true. I mean, because without investing, you're never gonna save. Without investing, you're never gonna save up enough money to ever retire. Think about it. You don't have pensions anymore, or very few pensions. You don't have, you're not gonna make the money in a savings account that you need to retire. I mean, I want you to think about this. An average household family, it makes about $65,000 a year. Household. If you saved up 20% of your income every year of $65,000, that's $13,000 a year. Over a 40-year period, that calculates to being what, Steve? My brain, honestly, 99% of the time, I think it's this camera's got me, bro. $13,000 a year over 40 years is $520,000. Now, don't get me wrong. I'll take $520,000, but that's 40 years from today. Or that's still in 20 years if you've already worked 20 years and hopefully you've been saving up. What is $520,000 today going to equal in 40 years? After inflation takes a bite out of it. Maybe half, 2/3, I don't know. But the biggest risk you can take is not investing. So the biggest risk you can take is not taking the risk at all, because you're never gonna have that fulfillment or long retirement without getting assistance from Social Security, or what does Dave Ramsey call that, social insecurity, or any type of other help. So in my opinion, that's why people do not invest. They're too scared to take the risk. They've heard from friends, family, coworkers. They've gotten bad advice. Until next time, I'm Brian Heron. Don't forget to like and subscribe, and we'll see you next video.